lumber. Why is lumber important? Lumber is important because that's what majority of houses use. Okay, that's what majority of houses are made out of. What? They're made out of lumber. So this is the price increase since August 2021 till February 2022, and this is where we'll start to top out. So we reached a price of lumber of 1,430, give or take. Since then, since February of 2022, we have declined roughly about 75%. Right now, usually, as Michael Geyer would say, when lumber is tanking and gold is rising, that usually means risk off. So it doesn't necessarily mean to short to make money. It just means be more defensive. Whatever investments you have, just stick to cash. You don't have to be short. Now, I like a little bit more risk, so I tend to short to make money on the downside as well. So remember, if lumber's going down and gold is going up, okay, it just means to be defensive. It normally means risk off. If lumber is going up and gold is going down, that tends to be risk on. Okay, which means invest on whatever you want to throw your money at that you have knowledge of. Okay, it is probably money printer is going burr. So that being said, where do I think we could go? Gold is towards its highs. All right, so for right now, it looks bullish. For now, lumber looks bearish because we're just downtrending ever since February of last year. Okay, we've just been on the downtrend. So
Mm-hmm.
if you bring that, if you use these two correlations, if lumber's going down and gold is going up, which tends to mean risk off environment, usually that the riskier things tend to go down. And even though me and you know what Bitcoin is and how it's not that much of a risk because of the knowledge that we have, we got to remember, think about how other people think of this asset class. And crypto is still a relatively new asset class, so they're going to think it's very risky. All right. And the thing that gets me with Bitcoin is Tether, bro. Like I don't know what to think about Tether. Usually, a couple of years ago in 2017, I would just call it FUD. But there's just something with with them not letting them audit Tether's reserves just to see if it's backed 1 to 1 to the dollar. And to me, that's fishy. I can't get past that. But just to avoid all that, all those narratives, we just look strictly at the chart. So I don't know if you remember, we were talking. This was with Julio too, months ago, and we were probably here somewhere, and then we rebounded, and we came back, and eventually we hit that $15,000 mark.
Mm-hmm. I
I
remember
said
that.
If Bitcoin jumps or it bounces, it could bounce to 30K. Where in 30K, I don't know, but the reason I always said that is because you had support here in 2021. You had support here when we had that first drawdown in 2021, and then that's when we bounced and they gave us that higher high. And you had some type of consolidation here of support where we wicked below it, but we were just hovering here for about a month, and then we broke below it. What happens in these types of charts is if you have a massive support area and it breaks, you want to wait because you don't know how low after it breaks, how low it can go. Like there's people were buying here, people were buying here, people were buying here, but we don't know how low it can go. It's normally when you see some type of sideways action is when you start to get some accumulation, which it happened here. So you had this red candle, but after the red candle, you had 1, 2, 3, 4, 5, 6, 7, 8. So 2 months of just sideways action, which would be considered like consolidation or accumulation. Now, ever since that accumulation area, we pumped right back up to this psychological area where price has either used it as support and big support, by the way, and then after it broke, it washed down. That being said, we're right. back at it, and you can see what happened here. We pierced it. We went all the way up to 31,050, and then we just nuked. Okay, these are every candlestick is a weekly candlestick, which means it takes a week to close and the new candle to form. So now there's this is an area. It's not a pinpoint line or anything like that. This is an area. If I wanted to, I could say somewhere around here is where you would want to look for rejections because we broke below it and we're testing it again. Let's just say hindsight's 2020 and this was the top, okay? Where could we look at to potentially look for bounces or to buy the dip scenarios? All you have to do is bring a fib from the low to resistance area of the high. So here's roughly your halfway point right here. So if it reaches somewhere around here, even just above the halfway point, 24,000, you don't want to start accumulating some more. If it reaches the halfway point, 22, accumulate some more. But me personally, what I think will happen, and I'll get into the indices in a second, is I think we're still in a recession. We haven't seen the recession in our lives yet as far as work and everything like that. We're starting to see the glimpse of it, but we haven't seen the panic yet. So I think if we're looking at things with no bias, just strictly what the charts are telling us, to undo us of all the narratives that humans like to read, and we make decisions, emotional decisions based off narratives, is if this is my range here, if this is my range, and if this is my mid range, well, we just play it from zone to zone, right? That's your first take profit if you're shorting. That's your second take profit if you're shorting. Okay, and if you're swing trading it. In my opinion, I would love to. It doesn't mean it's going to happen. But if Bitcoin can come down here, I think 15K is probably the low. But it wouldn't surprise me if we just wick it down real quick and then we reclaim like it's a V-shaped recovery. That wouldn't surprise me at all. Just to get them thinking that the support area is broken and we're heading lower, and this will probably be a major leg of despair, just panic, and then we just V-shaped recovery, and we start to head higher. And next year is the halving. Okay, so the halving is already coming up. I think it's projected for May. So if we V-shaped recover, and then we're in May or along those lines, we're at 25,000. That's good. That actually lines up with prior halving events. And why do I think this is going to happen? Let's go to the VIX. The VIX is the S&P 500 Volatility Index. I think it's for the S&P 500. Yeah. We're at 16. Every time, like this is 2020. Look how low we went before 2020. We were at 11. And then we pumped up to 19. And then we went back down to roughly 13 to 16 range. This range right here. And then it pumped up. Just to explain it, Uriel, in layman's terms, every time this pumps, risk on assets tend to drop. So if this pumps, this pump here actually was during COVID. This was March 2020. Okay. Oh. So we got this pump, and that's when Bitcoin, the S&P 500, the Dow, the NASDAQ, that's when all of them fell. Okay, because this pump, it's the volatility index. Now look at the height here. This was the COVID high, which is 85, roughly. If I take it back, the 2008 pump was even greater, just by a hair, right here.
Wow.
So this pumped to here. This was the recession in 08. Okay, so that's your volatility index. Let me say that correctly. So we're at the lows or close to it. How low can it go? I don't know. I mean, can we break the 16 and it being just like the 2020 and we hit the 11s to 13s? Yeah, there's a chance we can. But from what I'm looking here at the chart, which people shouldn't chart or do TA on VIX, I just do TA in general. So I just wanted to look where the support has been since COVID, and it's been roughly around 13, and we're at 16. So we can fall a little bit lower, and if we fall a little bit lower and drift a little bit lower, that means Bitcoin can probably just come a little bit higher here, and then come here, do this. Okay, because remember, this is just the area. It can pump higher and then fall. We don't know. So just looking into context, okay, just to wrap it all up, you have lumber falling and gold increasing, which tends to mean risk off. Okay, you have Bitcoin hitting a big psychological area of resistance that was one support. You have VIX hitting a big area of support right before in 2020 we just pumped like massively. And if you look at the S&P 500, you have it hitting a major area of resistance or a range. So you have the top end of the range, the mid range, and the bottom end of the range. We're hitting the top end of the range. Okay? So everything just seems to be lining up for the downside. And if we do get that downside, this will be the opportunity to start accumulating some more Bitcoin, accumulating any other positions that I don't know if you're interested in stocks, Udil, if you research any other company. But I think this is where we're going to get that despair, that panic selling soon, probably by the end of this year. And you'll be able to pick up cheap stocks, cryptocurrencies. I know we focus mainly on Bitcoin, but any other cryptocurrency that has some type of promise, we'll be able to pick it up at very, very cheap prices, and we'll just hold it like we did in during the halving cycles, and we'll just rinse and repeat. So everything seems to be lining up. Now, where would I be wrong? It's real simple. I'm wrong if this the VIX, the volatility index, can't even say that word. If this just starts drifting, and there's no pump, but it just drifting lower. If this is drifting and it's consolidating on the downward move, well, you can bet that Bitcoin probably, if you see something along the lines like this, like a break above, and then we come back down here and we're just floating here and we can't break below again. So we broke above this structure, this resistance area, and we're back at the resistance. If this doesn't go like this, then that would be a deviation. So you don't want it to pump up and then come back down close to it and then come back down again. That means we're probably going to hit the bottom. Because when you look at it psychologically, what happens if Bitcoin pumps to 44,000? Imagine the euphoria. And if it can't sustain and it goes back below this resistance area, there's a high probability that we're going to hit the mid and we're going to hit the bottom end of the range. But we're talking about the situation if I'm wrong. If I'm wrong and we do pump and we're holding this 30K area region and we, from one reason or another we can't break below, then you will start to buy here. Because most likely this was the bottom and you'll start targeting. If you're a day trader, you're going to target probably the highs, probably the mid-range of the high and then the highs, and then just wait to see what happens after that. And if it breaks above this high, if it makes it, then you're going to start targeting these levels here. And see how once you start marking the charts, now you'll start to realize just how this was our top end of the range, this was roughly our mid-range, and this is the bottom. You'll start to realize that this is a bigger range. This is your top end of the range, your mid-range, and that's your bottom. So everything starts to align. So that would be if I'm wrong and we probably don't get that downward move in crypto and indices. And if gold starts to, if gold starts to retrace and go lower and lumber starts to go higher, that's when you can bet that, there's a decent chance that we're probably going to head higher for the short term. But with everything that I see with the interest rates, PAL might still increase, but remember this video.
Mm-hmm.
Markets are made to take majority of people's money. Okay, there's a reason why there's a reason why roughly about 10% of traders actually make it, and this is their career that they choose. Like I said, it's the hardest thing you can do, but it's very rewarding. But markets are meant to take your money, okay? That's like casinos. Casinos weren't built because they were paying and a lot of people were winning. No, they're built. Those big buildings in Las Vegas are built because it took people's money. Same thing with this. You got to remember, if everybody is expecting a pivot to be bullish, what do you do?
You gotta think contrarian.
Mm-hmm. Absolutely. So if something breaks and Powell says, you know what, we're going to pause hikes and we might end up reversing and lower the interest rates.
Mm-hmm.
Can we get just a temporary pump? Probably, but that's bearish news. That's super bearish. So remember, like I said, if 90% of people lose money, they're thinking that herd, that 90% are all thinking the same. You got to think the opposite. And I think, and it's funny because the way the markets work is, if you look at this move in Bitcoin, for example, everyone is now happy. The bulls are happy that it's pumped to 30K. Now it's to them, it's more of a return to normal situation. Like, oh, we had that bear market, it's over, it's returned to normal now. This is why in trading or investing, even in investing, you shouldn't have biases because remember, we want a dollar cost average, but we want a dollar cost average at the best prices. So, and there's nothing wrong with waiting. Like if I'm wrong, like I said, if this just pumps up, well, it's real simple. It broke this area. Just wait until it touches that area again, and then get back into it. But this to me is crucial area of resistance, and I think uh, time will tell how much higher we go. But I think we will test the bottom of this range. So yeah, contrarians make money, and to
Mm-hmm.
your point, that's where you want to always look at the herd or the loud Twitter accounts, and not necessarily do the opposite, but take that into consideration and then react off of it.
Yeah, it sounds like you're just following the momentum.
Yep, yep. But that's it, bro. That's where we're at, and that's why um, this conversation started up with because you're interested in buying a home. I
Mm-hmm.
I can't see this. I was trying to find a lumber chart, but I think they just started with the lumber charts. Because what I really wanted to do is somebody there it is. Random link number. Let me see. This is 427. What is this one at 392? Because what I really wanted to show you is historically speaking, um, is if lumber. Let's see here. Let's try this one. Was this February? This was May. So something's a little bit off with these charts. Yeah, they're not all the same. I wanted to show you that if lumber came down 50% or 60%, let's just say in 08, and because think about it, how much did the houses come down in 08 here in Arizona? I think it was like 50%, right? Or 40?
I have no idea.
Because I remember like it was bad. It was bad. I think it was 50%. I don't necessarily remember, but I think that's what it was. And I can't. So in this chart, I can't go far back. It just doesn't go that far back. But I'll find a chart because what I really wanted to show you is I wanted to see, even for myself, is if the chart of lumber came down 50 some percent or 60% before 08 and it was foreshadowing the events that could happen. Well, the houses here, I think it did fall 50%. Um, so if that's the case, and I could be wrong because I don't know, I need to find that chart and let you know. But if that's the case, if this chart fell 75%, doesn't mean houses are going to fall 75%. But what if they fall and they fall close enough? What if they fall 60%? So
Yeah.
that's just another thing to be cautious of. But that's pretty much it, bro. That's all I wanted to break down.
No, yeah, it definitely makes a lot of sense, bro. Thank you for explaining those charts for sure.
My pleasure.